Our first speaker today is Josh Kincaid, Portfolio Risk Manager, C3 Fund, who will be presenting on the following topic: using automated algorithmic trading to invest in niche sectors like cannabis. Now, there's a lot to unpack there. Josh was a security risk analyst managing $650 million fund. He has a proven success record in finance, compliance, and operations within highly regulated industries. He's experienced the financial industry's stringent regulatory environment and has survived a myriad of regulatory changes in the cannabis industry. He constantly monitors potential changes that could impact the industry, utilizing an extensive contact base to leverage his clients' resources and maximize success. Josh has been connecting individuals and businesses since his internship at the World Trade Center. By the way, Josh, I'm glad you made it out of there. Over the last 6 years, Josh keeps a finger on the pulse of the industry, utilizing technology and data from Hedge, New Frontier Data, and the Cannabis Alliance. He analyzes economic market reactions and synthesizes recommendations. In his spare time, he produces a cannabis business podcast called The Talking Hedge. Google it. This is an excellent podcast worth listening to if you are a serious player. Josh is an advisor and contract CFO for companies throughout North America. He holds a degree in international business management from Western Washington University and a master's of finance from the City University of Seattle. Mr. Josh Kincaid, please take it away.
All right. Thank you very much.
Welcome.
Appreciate that, John. All right. Sharing my screen here. Wanted to just kind of start with this high-level overview of how we at C3 use automated algorithmic trading, or a robot trading, robo-advisor, if you will. So Warren Buffett's saying you cannot control your emotions if you can't control your money. We're going to kind of use that as a theme as we move forward. So at C3, we are an innovative FinTech company that licenses an automated stock trading software to sophisticated investors and institutional advisors to invest in niche alternative sectors like cannabis or crypto. So we use artificial intelligence-based technical analysis and machine learning with predictive analytics to invest in niche sectors like cannabis, Chinese, semiconductors, and we've branched out to add crypto or IPOs or a custom index. So we've actually replicated the ARC fund, Kathy Woods' fund, and got 170% return over her 110%. Also doing crypto, we'll dive into that. So we can do the Bangladesh Stock Exchange, for example. They don't have fully automated, and so we're able to send them alerts for a human to then execute. So there's a lot of different functionalities that we have here at C3, a lot of things that you can do for automated algorithmic trading as well. So we're investing using what we call smart frequency trading, and that benefits our clients with capital preservation, risk management, and long-term growth. And we want to be the world's first AI-based cannabis exchange traded fund, or ETF. I'm going to get into performance and show you eventually kind of how we compare against PodX and MJ. But first off, just kind of giving this educational high-level overview of what it is first. Back to the problem statement. Too many investors are following their emotions. So a lot of people are struggling to separate their emotions from investment decisions and following a reactive cycle of excessive optimism, fear, which generally leads to really bad decisions at the worst possible time. So at C3, we don't trade based on emotions. We're ranking investment opportunities based on the probability of benefiting from current economic conditions, trends, events, and then identifying those particular stocks that have the greatest potential for appreciation. So the most successful moneymaker in finance history, a guy named Jim Simmons, and he has one simple rule of thumb for investing, which is remove all emotion. So he founded he founded Renaissance Technologies way back in 1978. and got over $100 billion, with the majority of that coming from algorithmic trading. So that's the core part of what we're doing at C3, using similar tools to invest and manage risk while preserving capital. And as you can see, it's nothing new. Last year, over 65% of all trades were actually done from machines. So this started from Rohit Srivastava. He was our chief investment officer, portfolio manager. He locked himself away in 2015 and developed this algorithm, finally launched it in 2017 to track the S&P 500. And for the last 5 years, we have an average return of 43%, tracking that S&P with 7 figures in assets under management. So what is it? Smart frequency trading, if I can use Apple as an analogy, if you were to buy Apple in 2016 and hold it for the entire year, you would have gained 9.94%. But stocks are going up and down. They're volatile. They're crazy. If you've watched Bitcoin in the last 48 hours, you know exactly what I'm talking about. And we love that volatility. Why? Because we're not getting 9.94%. We're taking $2 here or $200 there, whatever. As we're timing that market, the peaks and troughs are what we're our bread and butter. We're getting 49% during that same period, taking advantage of that volatility. The predictive analytics is really kind of helping us get away from the emotions and more towards algorithmic trading, which is exactly what we want to do. So using an analogy of renting a house or buying a house is basically looking at certain triggers, right? So maybe you need a bigger house or something for your kids, and there's also filters. So how many bedrooms are there? All of those things that you're going to be looking at, and it all boils down to risk. So you're going to have an inspection come out. You're going to look at the roof. You're going to have an appraiser come out. All of these things are creating new decisions for you, and you're learning from that. But our algorithm is doing the same thing, just at a much faster speed. So the triggers, the filters, the risk, all of these things, predictive analytics and risk management is making a lot of new decisions and learning from a lot of new experiences. So ultimately, you've got artificial intelligence and machine learning creating faster decisions and more opportunities for you. So what is it doing? Basically, what we do is we take a SQL upload with key definitions, executing our various triggers. And although it's technical analysis, it's taking fundamentals. So that Jazz Pharmaceutical buyout of GW Pharma or the Tilray merger, we picked up all of that and made a significant gain. Executing through either E-Trade, TD Ameritrade, Interactive Brokers, or a proprietary system that our clients have, anything that has an API connection or gateway, we can connect to. On crypto, that's Gemini, Coinbase, eToro, things like that. They can automatically connect and start trading. So our secret sauce is smart frequency trading. Again, this is analyzing multiple data points for potential trades using this automated algorithmic trading function. So smart frequency trading is benefit our clients with long-term growth, as well as this capital preservation, utilizing risk management to generate above market returns. And it does this with a combination of technical, quantitative, and cognitive analysis, along with predictive analytics, which helps with crazy markets like crypto. So we asked a month in advance. Our predictive analytics kind of popped up, and we said a month before the election, are cannabis stocks poised for a breakout? And they were. They went crazy between October and January, saw a massive amount of speculation as everyone was kind of anticipating federal legalization. We've seen a lot of correction since January, but we were able to see that in advance. Looking at some of our predictive analytics, the red dots on here are showing you when we wanted to get out of the market. Looking at 2018, you can see in the middle of the screen in October, getting out before the market fell off 14% in October of 2018. Last year, we avoided that whole market fall off of 37%. It does this by running through over 800 equities on the New York Stock Exchange and NASDAQ, and then analyzing a combination of 80 indicators to identify points when the market might be ready to sell off. and likewise when a good time to get into the market might be. So some of the performance, like I mentioned, we do track for cannabis. We're looking at ETF MG, ticker symbol MJ, and then the Global PODX ETF. They had a -54, -56% respectively compared to our positive 93%. So outperforming them by 147 and 149% simply by really not using emotions. So year to date with crypto, as of 420, we were up 426% on crypto. Again, we got out of the majority of our trades before that collapse just 72 hours ago. So haven't had time to analyze where we got in, although that's what I'm going to be spending my afternoon because I'm interested for obvious reasons. So there is a lot of FOMO, whether it's cannabis or crypto. Excited to see if Mexico or Israel becomes a third and fourth country to legalize after Uruguay and Canada. Obviously, the U.S. is going to be doing that at some point. So we are seeing some increasing speculation into the industry, especially after the election. Again, when we saw South Dakota and New Jersey and Arizona and Montana legalize, a lot of cash flow came into the cannabis space, anticipating immediate gratification, and that ROI didn't happen. So there was quite a significant Fibonacci retracement since February, around 2/3, 60-something%. So that does lead for some opportunities down the road, but you gotta diversify. So trading diversification for capital preservation and market risk management. We try to buffer some of our cannabis stocks with ESG or environmental social governance stocks to pad some of that volatility. Some other ways that we manage some of our risk, depending on the type of risk. There's systemic risk and then non-systemic risk. So systemic risk is a loss to the entire market, and there isn't anything you can really do. Might not even trigger a trailing stop loss, and it impacts everything. Versus non-systemic, which is very isolated to either an individual security or sector, and there is generally something you can do about that. There are trading risks, whether that's emotional trading or tax issues. There's ways to mitigate all of those types of risks. So we mitigate our systemic risk with market downturn indicators that I showed you, and then non-systemic risk by diversification. We also have trading risks that we have AI making unemotional decisions and is also pretty decent at tax as well. So again, we have market downturn indicators as well as diversification, and AI has got our back constantly. So that's basically our smart frequency trading in a nutshell. Shameless plug on some of the nominations we've gotten the last couple of quarters for best crypto and trading platform, best AI platform, and be more than happy to talk about that. Obviously, it's not FDIC insured or bank guaranteed and may lose value. And if there's any questions, you guys can get a hold of me at josh@c3fund.com. And if there's any questions, if not, I appreciate the time, John.
It's like John lost his sound. Manic, are you there?
Josh, can you guys hear me?
Daniel?
Yeah, quite impressive numbers. I was a retail broker for 23 years, sold my practice 3 years ago. Obviously, this has been a great asset allocation for clients. How do you see it fitting in to just an overall asset allocation, you know, your traditional 60-40 asset allocation with brokers?
Brokers are some of our favorite clients, as a matter of fact. So regardless of what their strategy is or focus, it's a tool that we can help them either with fully automation or with, like I mentioned, just alerts. So regardless of sector, I think it's a tool that a lot of people should be utilizing in addition to other technical indicators. Ichimoku is another one. Elliott Wave, if you believe in that. So yeah, they'd be more than happy to talk to you more about it offline, but I think there should be more fund managers and asset managers utilizing technical indicators that we have at C3.
Absolutely. I'm sure I have a ton of questions. I could definitely ask you offline for sure.
Yeah, either way.
Mhm.
Appreciate it, Daniel. Thank you.
But
I have a
Josh,
quick question, Clifford Perry.
Hi, Cliff.
Hi, I know or I believe that we will all have access to this recording in full. Is that right, Brad, or no?
Yes.
Okay, and Josh, if I were interested in having, I have your email, but if I'm interested in having access to your PowerPoint, is that proprietary? Do you require an NDA or?
I do not require an NDA. I do the opposite, and I will give you a finder's fee.
Okay, I'm very, very interested in putting you together with another engineer that has a platform similar where I believe there's tremendous synergy here.
Beautiful. Thank you, Cliff.
You're welcome. Thank you.
I have a question for you, Josh. You know that there's 5 traditional measures of risk in a portfolio: alpha, beta, R squared, SD, and of course, Sharpe ratio. How have you assessed the risk of your program, and how do you compare?
We take all of those into consideration, Sharpe ratio especially, and our emulated results, we backtest everything, and they're pretty on point within a % or 2 from actual results. So crypto, our emulated results for last year, 420%, were emulated in actual results year to date, 420%. So in terms of the technical risk analysis, going back to 2009, 2008, I think are big for when we develop a fund. That's what we look at, is we're looking at certain crashes and certain black swan events and market risk. And so I feel like we're pretty on point. We're looking at that all of the time. To your point, I think there's going to be a certain area in time where we need to look at that as this longest bull market in history comes to an end. There will be a crash, and tools like this to kind of prepare yourself on when the timing might occur is going to be something that many, many people need and will look at in the future after they realize they don't have that kind of security. So I feel like we're already prepared, and hopefully we'll be able to prep other people with these kind of tools.
Okay, I'm going to wrap it up soon with a quick question. How long is your data set?
It depends on the fund. I mean, we've been in business for over 5 years running the algorithm across half dozen fund families. So, if you want data sets on crypto, we've got a couple of years back tested, or something that we've been running consistently for 5 years. So, plenty of info to run through with you if you want to see it.
I do, and we'll discuss that offline, but quickly, I just want to say that for those people that are interested in investing in cryptos in particular, I think that what you have to offer is really interesting. I mean, Bitcoin is 11 years, so I mean, how much history you really have, but you certainly need to take the emotion out of that particular sector. So I think you're onto something very interesting, and I wish you the best of luck.
Appreciate it. It wasn't easy for crypto either. To try to tie all in to get all of those coins and everything and then automate it was a massive task. And I think we're one of the only people doing it with automated algorithmic trading. So it's been a challenge, but it's never stopped us before.
That's fantastic. And it's such a fascinating presentation. I could go on, but
There's a lot more.
on.
I'm interested to see what other people have. So if there's no more questions, let's get this rolling, because I'm excited.
Yeah, one more question, John. I looked at my my Gemini account yesterday. Obviously, was very sad, and my PayPal too. So I don't have a Coinbase, but how did your fund react to that massive sell-off, primarily due to the big mouth of our Tesla friend?
Yeah, love Elon Musk, that guy. I've got a short position on Tesla, and it's not doing too well. But yeah, I'm just saying that anyways. the robot got out before the crash, so I haven't seen what its entry points were yet, Daniel, but I will definitely follow up with you. I'm excited to see what our entry is today. I think we're up at least 10%, in the last 12 hours.
Same here.
But we avoided that whole market fall off.
Okay, that was my question. Wow, okay. Awesome.
That's great. That's great. Well, thank you very much, Josh Kincaid, for an absolutely fascinating presentation. And I encourage people out there to find out more about what he's doing, especially if you're planning on investing in cryptos in a serious way.